Support and resistance. Have you ever noticed that price seems to bounce at the same levels over and over again? That is not a coincidence. It is one of the oldest and most reliable ideas in trading, and today you will learn to see it yourself. Support and resistance are two simple ideas that help traders understand where price may slow down, stop, or reverse. Support is a price level where buying interest has repeatedly stepped in, like a floor. Resistance is a level where selling has repeatedly appeared, like a ceiling. Picture a chart moving between a floor and a ceiling. When price falls toward support, buyers often step in and push it back up. When price rises toward resistance, sellers often appear and push it back down. This is why price can seem to bounce between the same areas again and again. But why do these levels form in the first place? The answer is simple. People remember. Markets have memory because traders have memory. People remember where price bounced before, where they bought, and where they wish they had sold. Because of that, many buy and sell decisions gather around the same prices. The more times a level holds, the more traders notice it, and the more traders watch a level, the stronger it can become. Psychology creates the level, and the level reinforces the psychology. What looks like lines on a chart is really human behavior repeating itself. Now let's look at how to draw support and resistance for yourself. First, zoom out on the chart. Beginners often zoom in too far and miss the bigger picture. When you zoom out, it becomes easier to spot the obvious places where price reversed multiple times. Next, mark the areas where price clearly changed direction again and again. And here's an important point. Focus on zones, not exact numbers. Support and resistance are usually areas, not one perfect line. Think of them like bands of prices instead of razor-thin levels. Round numbers also matter because they stand out in people's minds. In crypto, levels like 50,000 or 100,000 for Bitcoin often attract attention simply because they feel important psychologically. Quick question. What happens to a resistance level after price finally breaks above it? Think about it. The answer is coming up. Very often, old resistance becomes new support. Once buyers finally push through a ceiling, that same level frequently acts like a floor later when price comes back down to test it again. This is called role reversal, and it is one of the most useful ideas in chart analysis. You'll start seeing it almost everywhere once you know what to look for. A level that once stopped price from moving higher can later help hold price up from falling lower. Now let's talk about breakouts. When price breaks through a major support or resistance level with strong movement, it can start a new trend. That is called a breakout. But not every breakout is real. Sometimes price briefly moves above a level, attracts excited traders, and then quickly falls back down. That is called a false breakout. These moves can trap impatient people who jump in too early. This is why confirmation matters. Instead of reacting to the very first move, it's usually smarter to wait and see whether price can actually stay beyond the level for a while. So, here's the recap. Support is a floor. Resistance is a ceiling. These levels form because traders remember important prices. Broken resistance often becomes support, and breakouts are more reliable when they have confirmation. Follow us for weekly crypto education made simple. This content is for educational purposes only and should not be considered financial or investment advice.